So everyone out there, you know, from the mountains to the valleys, and people from the deserts to the Great Plains, and from sea to shining sea, all across this great country of ours, welcome to today's webinar, where we'll be talking about the importance of asset management. We do have a full house, and so I want to thank you all for taking time out of your busy days and busy schedules to attend. I am your host and moderator. My name is Robert Kaler. I go by Bob. I serve as a Western Region Vice President, and I'm very happy to be a part of Asset Management Awareness Month. When we talk about it, we're going to talk about what's important for effective asset management, and usually a lot of the discussion revolves around, the who is important, and we talk about, well, procurement people and receiving people and legal people and the finance people, and we go through the litany of people that we touch every day, and it is very important, being service oriented discipline that we're in. And it's important to have these personal relationships with people, but what I really want to focus on today is not the who, but the what, the why, and the how of asset management, and how it really affects how we operate our businesses and the value to businesses, organizations, and society in general. If you look at this graphic that I've got up on the screen, it's really all about starting with corporate objectives, and whether it's a corporation, whether it's a university, whether it's a government entity, we all have objectives, and we talk about values and strategies and regulatory requirements, targets, and those are really reflected by the asset manager then, who has to go through the process of making sure we've got the right things in the right place at the right time, because it really affects the asset service providers who provide a lot of different elements for the success of our organizations, and these include things all the way from operations to maintenance, and even readiness for required services that one provides, and they take that data and run it back to the organization and look back at the corporate objectives and how well we've met them, because they're really important, because asset management is all about value and impact. And so today I'm really happy that we've got a great panel of presenters that are going to be talking about the value asset management from some different perspectives, and they're going to be talking about how, from a very high level, it can impact businesses and society. So let me introduce them to you right now before we get into the actual content. First, Jennifer Steele. Jen is the manager of fixed assets and surplus property at James Madison University in Harrisburg, Virginia. She's responsible for managing life cycle of property management, from acquisition to disposal, the utilization, the reporting, the stewardship, and she really directs the activities department to ensure that these fixed assets are properly recorded, tagged, reported, disposed of, and she has to look at university, state, federal policies and procedures, as well as GASB, which stands for the Government Accounting Standards Board, for these GASB recording requirements. And she also administers the university's web-based fixed asset management system, and is, as part of that, requires to ensure security, accountability, data integrity, and maybe most importantly, adherence to internal controls. So she's a member of the NOVA chapter. I'm really glad you're part of this, Jen. How are you out there today?
Doing great.
Good. Thank you very much for being a part of it, and we're going to circle back to you and have you talk about the importance of asset management from the perspective in the university world. Our next guest is Tom Ruckdash. I don't know if Tom has gotten on the call yet. I know he's struggling to try and get there. But Tom, Yeah, perfect. I know he'll be there. Tom, I'm very, very pleased to have Tom today. For you, those of you that don't know Tom, he is a deputy director of the Defense Contract Management Agency, DCMA, and he's responsible for developing policies, procedures, and practices for all the assigned agency mission areas. And his primary and major emphasis is on government contract property and the contractor business system. So he also manages the DCMA's contracting officer warrant and appointments policies, and the responsibility includes his program responsibility for the contracting officer assessment tool and review board practices. So those in the DoD world know what an important position this is that Tom is filling. The second thing, before he went to DCMA, he was with the office. Hi, Tom. Perfect. So Tom was with the Office of the Undersecretary of Defense and Acquisition and was responsible for projects involving accountability and financial accounting of DoD assets, including personal property, military equipment, heritage assets. He led a federal-wide effort to revise federal acquisition regulation requirements, the FAR, so Tom was part of that. Tom was the Federal Property Manager of the Year in 2006, which is the highest honor that
How do you?
I'm introducing the panelists. I'm going to be coming back. I'm going to be coming back to you in a few minutes, Tom, where you're going to, give your insights into the importance of asset management before we get into the roundtable. So thanks, Tom.
Okay.
I'm glad you're here. I love it when a plan comes together. So our third panelist, who's I know I heard him on, and he's a wonderful candid picture that he provided for us, is Jim Dieter. For those of you that don't know Jim, he's really an internationally respected asset management leader and a strategist. He's the executive director or the co-founder of the Asset Leadership Network. He's also serving as the ANSI head of the U.S. delegation to ISO TC 251, which is the ISO 55000 asset management system standard. He oversees that. He's been traveling internationally and working with countries across the globe to put this standard together. Jim has developed 7 ASTM standards. He has been a property and financial manager for many top companies, including Northrop Grumman, Honeywell, Computer Science Corporations, and SAIC. And he's held many positions in NPMA, including EVP. He was the NPMA National Property Person of the Year in 2005. Again, very high honor. And on ASTM, they have an award for to recognize individuals who provide outstanding leadership. And the award is called the Dieterman-Hesterman Award, and it's been named after Jim because of the technical, administrative contributions he made to the committee over a long period of time. So I'm very pleased you're here today, Jim. Welcome.
Good to be here. I am cruising up the Shenandoah. I thought I was going to stop and do the couldn't get any reception when I stopped. So, but I'm here. Glad to be here. Thanks for the introduction.
Thank you. We're glad you're here, and it's a beautiful scenery. So maybe you can pop in from time to time if you see something really great and paint the visual for us. Thank you.
There you go.
I'm going to take a few minutes here, and each one of our panelists are going to spend a little bit of time about talking about the importance of asset management in sort of their area of focus and discipline. And I'm going to ask Jen to start out with it. And so, Jen, I've got a couple of the bullet points that you've provided here. I'll be be happy to drive them, let you know. But, welcome, and we're very interested to hear, from your perspective, why asset management is so important.
Well, thanks again for having me. I really appreciate being on today. And I just so folks out there know, I work in the finance division at James Madison University, and my department's responsible for the financial work papers for equipment and depreciation. So it provides me with a slightly different perspective on asset management than most people have. So I guess I'll get into my bullet points. Yep. So I just wanted to start off talking about the accounting for asset additions. And one of the big things we deal with is just timely entry in our fixed asset system and its effect on financial statements. We just need to make sure that we're always capturing assets in the correct physical year based on their acquisition date and entering them in a timely manner in the fixed asset system, because those assets become capital assets and are part of the non-current assets section of the university statement of net position and need to be reported accurately. Another key area is the assignment of useful lives to assets, and there's an effect on depreciation and the indirect cost rate. And so when the assets are entered in the fixed asset management system, they're assigned a useful life, which is based on usually past history within our organization, as well as standard useful lives determined within each type of industry. So, state agencies can, kind of have the same type of useful lives, as well as federal agencies, or, can be even different with private business. So that's one of the areas that we really have to look at, because the useful life that's assigned directly determines depreciation expense for the asset, and which in turn will affect our university's indirect cost rate, or F&A rate, which, just so people out there know, that's a rate that's used to determine the reimbursements to the university for kind of overhead charged to sponsored research and other sponsored projects. So it's kind of a trickle-down effect that everything kind of flows through and affects other areas. Also, with asset management, the accuracy of the location of assets is key, because it really can have an effect on audits. Through our inventory and other documentation from departments, the accurate location of assets in the fixed asset system is critical when it comes to audits by internal or external auditors. We deal here at JMU with the Auditor of Public Accounts, which is the state auditor, because we are a state agency. So when those auditors come in, you really want to be able to take an auditor to, an asset that they have provided as a sample they need to verify. And because usually that information for that audit is directly taken from the fixed asset system. So, we want to have a good audit each year. And also the proper recording of gifts and donations is another area that we look at with its effect on financial statements. We need to know the fair market value of those gifts and donations from the donor for proper accounting of the gift income to be recorded in the financial statements. Most of our gifts and donations go through our foundation, and they are the ones that are typically finding out that fair market value, but we need to know that so that we can record that correctly on the financial statements and our papers. Another big area with accounting for asset additions are unique tags being used for grant and contract assets, because of the effect on meeting grant or contract terms. By using a unique tag on grant or contract, it really helps kind of make that asset jump out. In the case of JMU, we use barcode tags, and on our barcode tag, we have in red lettering restricted, and the numbering series used for these type of assets begins with the number 9. So when a department, is looking to move or surplus an asset, then they're going to contact us and let us know that tag number, and that's going to jump out to us that it was purchased with grant or contract funding. So we can make sure to get in touch with our sponsored programs department to determine if the grant or contract terms have been satisfied and if the transfer can occur, or if we need to, let the department know the asset needs to be returned to the granting agency if that's stipulated in the terms. And another area for asset additions that we focus on is just recording of asset funding source with its effect on financial statements. In the university setting, the funding of an asset needs to be documented in the fixed asset system so it can be correctly reported in the financial accounting system, which then feeds through the financial statements. In the university setting, for example, we have education and general funding, we have grants, we have auxiliary enterprise, which are kind of those areas that make money on their own, such as athletics or dining services. And then we also have capital projects, funded assets, which is usually funded through bonds. So those are a lot of the areas that I deal with accounting for asset additions.
Jen, I have a question from Linda Olds. Just a moment, and I'll unmute her. She'd like to ask you a question or chime in with a comment. Linda?
I did not have a question. I'm sorry.
Oh, I'm sorry. Your hand was up. Okay. See, those are tricky little areas to click on. No problem. Sorry to interrupt.
That's okay. I was actually done with that and on to accounting for asset disposals. So in the university setting, I think one of the main things, which is probably going to be within the organization, is communication with the departments that have assets is really key. And in our case, it's key with regarding trade-ins and the effect that has on the value of new assets purchased and on financial statements. We need to know, from the department when they do trade-in, the credit amount received for the trade-in, because that amount needs to be added to the purchase cost of the new asset and recorded in the fixed assets. And that credit that's received for the trade-in is also considered a gain on the financial statement. So it's just really key on knowing the disposition of assets and getting that recorded in a timely manner. And as was talked about with my introduction, I'm also in charge of surplus property, but that isn't always the case for most organizations to have that tie-in. So for excess or surplus disposals, it's really key to have timely receipt of documentation and entry in the fixed asset system, because that does have an effect on the financial statements and depreciation. So communicating with the surplus operations is key, because you want to receive that timely notification of the surplus disposals so you can get them entered in your fixed asset management system. The disposal entries will end up affecting the cutoff of depreciation expense, so that you don't want to charge more expense when you've already disposed of an asset. And we also, those disposals and the associated depreciation need to then flow through to the financial statements for proper recording of any gains or losses and that accurate depreciation expense. And our fixed asset system does provide the depreciation, and that's one of the key items I have to deal with each year end for the financial statements. And last item I wanted to talk to you about accounting for asset disposals is just lost or missing assets that are noted during inventories and procedures for timely disposal. It's pretty much one of those things. Usually it's based on your organization's policies and procedures as to how you handle the disposal of lost or missing assets. But you need to follow those policies and procedures and what they dictate, but make sure that those disposals are made in a timely manner in the fixed asset system. The disposals, and depreciation need to be accurately recorded in the financial statements. Everybody has a different way they do it. In our case, it's, after missing or lost for a second inventory cycle is when we would dispose of the asset, but everybody can be different on that, but you always want to be on top of it because of just the effect your fixed asset system has on the financial statements.
Jen, now I have a real question.
Okay.
How do you separately account for bonded funded assets? Are you using a separate tag series number or just selecting the attribute in your asset system?
we have the funding in our fixed asset system that would show that that was, bond funded, what type of bond or whatever with the funding. So it's based on a department ID that financial reporting uses. So each asset has that funding recorded in the fixed asset system. We don't use a separate kind of decal for this.
Great, thanks.
Okay, thanks so much, Jen. I have a question for you. So what happens if you don't get it right? What are the outcomes? What happens to the university? What kind of impact might it have, to students and administration if you don't get this right?
Well, I mean, really, that's our goal being here is for the students. So, if you're not getting this right, then you're, affecting the equipment that they have available, which kind of affects their education. So you want them to get, high quality education and have the equipment available. You don't want bad audits and, the negative consequences from upper management having to correct things. And overall, since we're a state agency, you don't want to waste the taxpayers' money, really. And we sometimes have watchdog groups that can, because our information is public, can go out there and see, well, how many missing assets, they had and that kind of thing, and stuff ends up in the newspaper. So you really don't want that negative press because, down the road it can affect your donations and endowments.
Wow. So what you do from your perspective is really key to providing a really great education as well as keeping the institution itself in a very high public view, so that the future of what James Madison University can be doing is just enhanced.
Correct.
So thank you so much for that, and you'll stick around, and we're going to have a little bit of a roundtable after our next guests have a moment to talk about their particular segment, and in this case it's to Mr. Tom Ruckdaschel. Tom's going to talk about from a DoD and defense contractor perspective why this whole asset management thing is kind of important. Welcome, Tom. Are you there? We still got you?
Yeah, I'm here, Bob. I'm
Excellent.
Still right here. Thank you.
Great. I can hear you great.
Good. When I'm asked to do these things, especially this topic called asset management and the importance of asset management, I never quite know where to begin because there are just so many tentacles and aspects and pieces to this thing called asset management. There's logistics, there's property accountability, there's finance, there's all kinds of things. But just by way of background, yeah, I work for DCMA, but I have been here at DOD, OSD, AT&L on a detail for the past 5.5 months. In fact, the detail ends this Friday. Helping out, basically. They asked me to come up and assist in some things, and I was glad to do that. But one of the other areas that I've just picked up on, and it's really an interesting thing, is the idea of readiness. And just what I mean by that is, and I'm just going to give you raw numbers here, there's about $1 trillion worth of property on the DoD balance sheet if you wanted to go online and look at that. And there's a substantial amount of that is government-furnished equipment. And a substantial amount of that government-furnished equipment does not appear on the department's systems of record. There are property records. This is not particularly new. We have a material weakness. It's rather public, so I don't think I'm saying anything out of turn. And from the standpoint of property accountability, that's not good. From the standpoint of contracts, that's not very good. But what I picked up on here in my tenure at OSD for the last 6 months is that now the military departments are thinking of that weakness in terms of readiness. And I had never really thought about it that way before. Readiness in the sense that having equipment to go to war. Since it's not on the records, what can happen? Well, for one thing, you may need it and not know you have it. You may need it and have to go out and buy another one. This obviously all costs money. And DoD is now looking at this issue from the standpoint of readiness. I thought it was a very interesting take, and I confess I hadn't thought about that before. And some of that weakness can be translated into what I'm just going to call contract quality. And what I mean by that is the right contracting vehicle, the right use of contract line items, the right use of contract terms and conditions, having all the proper right clauses in the contract. All these things are now being measured, including the DoD requirement to have a standard GFP attachment, which is really a list of GFP. And the funny part about that last item is that has been a requirement forever. There has always been a requirement for the contracting officer to insert a list of GFP in their contracts, and only now is it becoming, it has become a major issue. This lack of proper contract structure tied into this attachment, tied into these clauses, leading to a negative result on readiness, and that's sort of the current state of affairs in DoD, amongst others, as we're working toward what used to be called the clean audit opinion, it's now called an unmodified audit opinion. This emphasis on finance has really put property on the map. It is just amazing how so many people are now into, if I can put it that way, asset management. Where are the assets? What are they valued at? Numerous kinds of data calls. You see the results of this awareness all over the place. So, having said all that, I'm rather glad that we took the time 12 years ago to rewrite the FAR property requirements, because it did create the standard template with which to work, and I shudder to think what would happen if that work hadn't been done. So that's what I've been working on these last 5.5 months, and I'll be going back on Tuesday to DCMA headquarters to continue the refinement of policy and procedures for contractor oversight and business systems, and that's my statement for today, and I'll be happy to answer any questions you might have.
Tom, I do have a question for you.
Yeah.
Is the list related to DFAR 252.211-7003? No, the attachment is actually an internal DoD requirement, which you can find in policy, and you can find in Procedures, Guidance, and Information (PGI). PGI 245 103-72. And that is the instruction. That is the instruction to the contracting officer community to use the prescribed DoD attachment. And I will add, it's not a new requirement. What is new is that it's a standard attachment. There's always been a requirement for an attachment, but for anyone who's as old as me, you'll probably see in the past all kinds of attachments, Excel spreadsheets and Word documents and that kind of thing. But DoD had enough of that and began as an important part of end-to-end visibility of GFP, this standard GFP attachment that can be used for data and to have that information throughout the contract distribution process and ultimately to property disposal and so forth. But anyway, it's PGI. That's the answer to your question. Thanks very much.
Yes.
That was excellent, Tom. You know, I have a question. Let me ask you a question, because I think you got a unique perspective on it. I'm always interested in what executives think, and you're sort of in a unique place in that the executives that may be looking at this, in addition to you know, the top brass at the Pentagon, the generals and such, you've also got people in the administration. You've got congressmen and senators. As well as the general public, which are really your bosses. You know, how much do they know about asset management, and what is their view of the importance to that? And do you see that changing, accelerating right now? It
is most definitely accelerating. Most of the I'll say senior leaders, if you want to call them that, depending on who we're talking to at any given time, it's like all eyes are open to this issue called asset management and GFP. They're especially under the like as I said, under the military departments in terms of readiness. They had no idea. Many people will admit they have no idea just how complicated this world of government furnished property. I'm just going to say GFP as a generic statement, which includes a lot of other things. But you know, it's an area that you know, if you were in it, if you were in the GFP world, in the property world, and went to NPMA every year, this is not all that unfamiliar. But if you're, let's say, a contracting officer who doesn't have to do this every day, it is all rather new. And a lot of the training I do and the outreach I do is with not so much what I call property people, but with contracting officer people, contract specialists, who have to write the mods, who have to add the attachments, who have to understand a little more intricately about what the government requirements are. Most of the policy changes in the last few months have been on the contracting side, not the property side. We haven't had many property rules, if you notice, the last couple of years. They're basically stable. They could be maybe minor here, little improvements here and there, but basically they're in place. It's emphasis on what the contracting officer has to do, what government agencies have to do, what the requiring activities have to do. And now we're taking it a step further and trying to tie that community to what I'm going to call the accountable property officer community, which is the people who have it, who run the department's books, their accountable property systems of record. I gave a presentation the other day about having the accountable property officers actually being a part of the requirements piece, the pre-award side. So they should be reaching out to their procuring commands to learn a little bit more about where their property is, because ultimately it's on their books. They're responsible for it. So it just seems like the whole world is looking at property lately, and it is all good. It is just going to take a lot of time to put to allow these controls that we put in place to mature, to allow the policies to be absorbed, and to make them effective, because it's very new to a lot of folks. It's just very new. Does that answer your question, Bob?
Yeah, it does.
I tend to run off. But the important piece of that is since the department started on the track of just getting a handle on assets and getting clean audits and the financial piece, but now the other side of the other community that's woke up to this is the services, looking at it from the standpoint of readiness, and that's a very important distinction and something that's never come up before. The idea of, let's say, the Army concerned that some of their equipment that they need in this time of in this times we live in don't have visibility of the assets that are currently existing in contractor plants, because contracts were never properly written years and years and years ago. So all of these things are now becoming much more visible, getting fixed, and it's actually an interesting time to be in the middle of all this and see how it all works out. But I hope that answers your question.
Yeah, it does. I think
senior leaders have woke up to this. Absolutely.
I think what it just points to goes back to the purpose of our webinar, the importance of asset management, and really the value and impact that these individual asset managers out there are really going to have, especially as they start to look to the readiness and how important that is to the overall health and well-being of our nation. So
that's correct. Yeah, it's a different tact. Very important.
Thank you so much, Tom. We're going to kind of like put you back in the green room till we come back. Okay. So thank you for that. And what we're going to do now is I'm going to click the button and bring in Mr. Jim Dieter, who's got a very interesting take on the importance of asset management, kind of from a corporate and a government perspective. Separate government being separate from DoD in my mind, and talk about that. And so, are you out there, Mr. Mystic Traveler?
Yeah, I found a rest area with more bars on my cell phone, but I was unable to get on the webinar from here. So if I could give you a clue as to what slide I'm looking at, maybe you can click them along for me if you would, Bob.
Great, I'd be happy to. So you're going to talk about the opportunity for impact. I'll go to the next slide, which has a lot of big pictures, and talk about asset management in a nutshell.
Yeah, and I think the words, to reiterate the words you said, when Tom said it, Ben said, it really is a time of great opportunity. We're doing asset management. Then through ASTM, and then in our efforts ISO internationally, discovered many more people doing asset management in different realms. So I'm going to try to bring a little bit of that today, in a couple of minutes here, and give you an idea of some of the things that are out there and opportunities. But I think the huge issue is what Tom just said, and talking about readiness. That's the value that those assets are providing to DoD. That's how they measure it, and that's what's important to them. So it's, in more general terms, it's supporting the mission of the organization. And I know it's, it's real easy to get involved in the day-to-day activities that are so important, at the asset level, managing the assets. But then there's, you can also conceive of it as asset management as more from an ISO perspective, it's a management system for asset management. So it's a sort of a step back. So, my comments are sort of a challenge to go in that direction and to look at the broader picture of what you're doing and what you're contributing to in the various roles that NPMA people have in asset management. And of course, can be really, really broad there as well. But that first nutshell slide just shows some of the types of asset management we're talking about around infrastructure and roads, around fleet and equipment, are huge categories of assets. John O'Shaughnessy, who there's probably not too many people around anymore that remember John O'Shaughnessy, but helped us get started with E53 and our standards effort, from NPMA. And he wrote a great article that said any organization needs three things: people, money, and stuff. And we've spent a lot of time, organizational effort, energy on managing people and on managing money. And just now, as Tom said, they're catching on that the stuff is a big deal. Tom mentioned a $1 trillion number, numbers for DoD. Numbers I've heard from Alex Kurian at GSA, that's over real and personal property, is that there's about $1.5 trillion worth of government personal property and about $1 trillion worth of government real property. It's just mind-boggling. And that we have the opportunity, if we can just help to make a little impact on that could have a huge dollar impact and help with achieving the organizational mission at the same time. So bridges, roads, fleets, yellow fleet, but maybe click on to the next one there, Bob, on the types of property. Tom mentioned this as well. Anything is a partial list, but just an idea of the different types of assets. And I know personally that there's people out there in the United States and around the world doing asset management, and the thing they're focusing on are these different kinds of assets. It's just remarkable. So there's a lot of information out there and a lot of people doing asset management. And the next one is the communities of practice. List some of those. And again, some of these have been mentioned before, or logistics, et cetera. I don't think I even have logistics on this list, but IT asset management, data asset management, budgeting. We heard from a finance perspective, and that to really have a systems level view of asset management, you're really looking at an effort that encompasses all or parts of those efforts around managing the assets of the organization. And then there's one more slide on sectors that gives some perspective on that. We're very used to the government contract property and government property in general. There's also just a huge amount of impact that the U.S. federal government has on states and municipalities and how they manage assets. We have some familiarity, and as Jim said, today on what the federal government does impacts colleges and universities, and it impacts private enterprise as well. Just one interesting one, if you're not familiar with it, check out Map 21, Department of Transportation. It's their asset management plan for the 21st century. Remarkable stuff going on in that area. So the next slide sort of, again, sort of wraps that together. The assets are everywhere. I mean, think of an airport. We got the airplanes, we've got the ground systems, we've got the food vendors, we've got the runways. I know when I worked, did some NOAA support work for a while, and NOAA has assets in every airport in the United States. So there's NOAA assets at that airport. So a remarkable collection of assets that are really, a core aspect of our society. And from an NPMA perspective, our niche in thinking about those $3 trillion worth, or at least the $1.5 trillion worth of personal property, is a huge piece that impacts everything else. On the next slide is a TC 251 slide. And people are probably familiar with at least TC 251 was the effort that developed ISO 55000. It was published in February of 2014. So we're coming up on the 2-year anniversary of it being published. We had a meeting of the now TC Technical Committee, which just means it's a permanent committee instead of just a project committee. We had a meeting in Japan in November, myself and some others, folks that Rich Culbertson and others, who's got to go and represent the United States. Really, really an honor at the meeting in Japan. And this slide gives you a little bit, I'm not going to cover all of this, but I give you an idea of the forward effort that's involved in this group. There's going to be a lot of work on communications and getting word out about the standards and who's using it, is under market feedback to understand what's working with the standard and where it's being used and potentially how we can improve it going forward. There's a lot of work on finance. And what we've found, especially from a U.S. delegation perspective, that the accounting practices that are in place are really 19th century accounting practices that were codified in the 20th century that are really inappropriate to where we are in the 21st century. What can we do about that? When we have an asset that we have to predict how long it's going to last from an accounting perspective and do depreciation on it, how does that impact the actual management of the asset? And are those systems really connected? And is that system connected to your IT people, with IT asset management? And of course, we're coming to the Internet of Things where everything's going to be an IT asset. How's that going to work in your organization? Do you have alliances with those people? So some interesting things going on. We're also working on a revision of ISO 55002, which is the document that's just guidance with sort of some extra words about the standard. So there's a group starting to work on that. Doesn't change anything about the requirements in 55001, but there's some people that want to work on the guidance. Also, it mentions the Spanish translation group there, but the document itself has been translated into, I think, 8 or 9 languages now. Chinese, Japanese, Portuguese, Spanish, French, Dutch, German, maybe a couple others. So it's a big deal around the world, and we're working very hard on those principles and raising that awareness in the U.S. through the U.S. tags, ISO, TC251, and through Asset Leadership Network, and of course NPMA is working there, SMRP and other organizations as well. I put a couple slides in here on the Institute of Asset Management's conceptual model. I don't know if folks are connected with the Institute of Asset Management. It's people that are largely engineers based in the UK, and they're largely focused on infrastructure. But they have some really interesting intellectual property and thoughts around asset management and how it can be done. And it's sort of just one piece of the intellectual property that exists around the world around asset management. The Australians have a lot of really remarkable things as well. Perhaps a topic for another whole webinar sometime. Just the interesting information that's out there. I know from an NPMA's perspective, we can get very focused on compliance, and we've got to do what we got to do because we got to do it. When we really start focusing on readiness, I think that when you see our management involvement, where we're trending is greater organizational awareness of their assets and the impact those assets have on the organization. And there's going to be increasing demand for people that know how to do it better and not just know how to do it the way that it takes to be compliant. Obviously, we have to be compliant in a government environment. It's just whether you're working for a federal agency or a government contractor, DoD or civilian, that's rule one. Has to pass that test. But beyond that, there's ways to increase the value your organization is realizing from assets, whether that's readiness in the case as Tom mentioned, or more things more translatable to dollars, that we see in the private world. It's really, really important. And then there's one more slide there. It talks a little bit about the Asset Leadership Network. We've been working with the NPMA and other associations trying to impact public policy around asset management. We have a draft executive order that would increase the awareness around asset management and require federal agencies to embrace management system standards like ISO 55000 in their management of their assets. So that's some pretty exciting things there. And then the next slide on the outcomes, just briefly, some of the areas that that we're using to increase those values from assets. So sharing this information, for example, from the IAM with the NPMA, sharing NPMA expertise and compliance with groups like the Society of Maintenance and Reliability Professionals, and with the IAM, with people that are involved in IT asset management. Really interesting possibilities there. But a really big opportunity now on the public policy side. There are a number of bills and draft bills in Congress dealing with asset management. So we're working with people there, working on developing a congressional working group on asset management that has the opportunity to really inform this and whatever the incoming administration is on asset management and its importance and how it can be done better. Then the last slide there talks a little bit about the public policy and corporate governance. There's huge impacts there. I think I've covered these concepts in general. Standards and continue to be a big part of it. If we can have standards and follow standards, our ASTM E53 standards, ISO standards, and others, that means we don't have to try to regulate this. And it allows people that are experts in asset management, like ourselves, to be impacting the processes that organizations are using, and the ways to realize value that we understand and can bring to our organization. And that works on the public side and on the corporate governance side as well. I think that's what I have, Bob.
Well, thank you. Thanks, Jim. That was really good, and being able to see the importance of asset management from these different perspectives. And the three different perspectives were pretty good. And there is a confluence of things there that it's all about value, it's about impact, and it's about elevating it and the risk of what could go wrong. I mean, it's so, let me kind of bring everybody back in and ask just a couple of questions, and I'll let you guys decide how you want to answer it. But what I would like to first of all ask, I think because there's so many people on this webinar, and it just comes down to people, and we're an organization of people, so I want to ask you to talk a little bit about asset managers themselves, and that how might you see the human element of asset management changing, in the near future? I mean, will roles and responsibilities change? And as the NPMA is working towards getting the kinds of certifications that kind of elevate asset management to a profession, and do you see that impacting the view of asset management at different levels in the organization and across the general public? And are we kind of going to eliminate that Rodney Dangerfield effect that property managers have, where a lot of times you just don't get any respect? So let me open that up to either Jen or Tom or Jim. Anybody want to take a swing at that?
Wow, you make it tough, Bob. I can tell you my own. I can tell you my own experience that there's a greater awareness, and by extension requirement now for good asset management and good asset managers, and I think in DoD anyway, they are getting the respect they deserve. The best thing that's happened to property in the last couple of years has been the whole emphasis on the financial side, the CFO requirement, because inherent in that is asset management. And who does that? Well, it's asset managers. It's not the accounting side. It's people who touch and reconcile property, and they are getting the recognition, much more recognition today than I think they have in the past. And not only that, it's just the meetings I go to, the questions I hear that I never heard before. What is this thing? What is this all about? Kind of thing. What is this GFP thing all about? Never heard those kinds of questions before. Never saw the kinds of ad hoc data calls that I've seen in the past few months. Just the need and the thirst for data on assets that I never saw before. So it's put a lot of people on the map who hadn't been on the map before.
Excellent.
And now this work internationally, I can't even imagine what's next.
If I could jump in, I think what it does is, as we see in the society in general, more and more it's about, from an individual perspective, is what can you offer your organization? The fact that you've been there a long time, or the fact that you had X number of years of experience, we've all seen that, the way that that's valued decrease over time. Organizations want to know, what can you do to help me next? What's the next thing? And I think what you've heard today, does that. If you're thinking you can rest on your laurels, I think we all know we need to get better at what we're doing, to know more and to find more ways we can contribute. And if your organization doesn't appreciate that, I can tell you, around the United States, around the world, there are other organizations that appreciate this value that asset management brings to our organization.
Thanks, Jim. Okay, well, we've come up